and gentlemen, good day and welcome to the Q3 FY24 earnings conference call of Rupa Company Limited, hosted by Orient Capital. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sumit Khetan from Orient Capital. Thank you, and over to you, sir.
Thank you, Muskan. Good afternoon, everyone. Thank you for joining us on the call today. We are joined by the management of Rupa Company Limited, represented by Mr. Vikas Agarwal, Whole-Time Director, and Mr. Sumit Khowala, Chief Financial Officer. Before we begin, I would like to give a small disclaimer that this conference call may contain certain forward-looking statements which are based on beliefs and opinions as on date of this call. These statements are not the guarantees of the future performance and involve risks which are unforeseen and difficult to predict. A detailed disclaimer has been added to the reference presentation which was uploaded on the stock exchange. I hope everyone had a chance to go through it. With this, I would now like to hand over the call to the management for their opening remarks. Over to you, sir.
Good afternoon, ladies and gentlemen. On behalf of Rupa Company Limited, I would like to extend a warm welcome to all of you who have joined us for this results Concall. We appreciate your time and interest in our company performance. I hope that everybody had an opportunity to go through the financial results and investor presentation which have been uploaded on the stock exchange. Let me start with our financial highlights. We are delighted to announce that we have achieved a remarkable growth in terms of both revenue and profitability. Revenues in Q3 stood at 319 crores, representing a growth of 35% on year-on-year basis. EBITDA margin for the quarter stood at 10.3% for the quarter, up by 430 basis points year-on-year. PAT margin for the quarter stood at 6.5%, up by 420 basis points year-on-year. EBITDA margin for the 9 months stood at 9.4%, up by 1 basis point, and PAT margin for 9 months is around 5.6%. Our sales performance has been resilient with a notable uptick in demand across various product lines, especially in core innerwear segment and athleisure segment. Overall, our sales volume continues to achieve robust double-digit growth this quarter to a 45% growth in Q3 and 21% growth in 9 months, financial year 24. Economy segment volume grew at 20%, mid-premium saw growth of 22%, and premium grew by 40% in volume in 9 months, financial year 24. Geographically, East market continues to be a major contributor to our sales mix, followed by North, and export, though it is sluggish, continued to contribute 3% to the overall revenue in 9 months. Expenditure on marketing and branding activities in 9 months remain in line with our annual allocation. Going forward, we expect to see sustained customer demand and firm raw material prices around current levels. These factors will provide impetus to growth in coming quarters with a sustainable margin. We are confident to achieve double-digit revenue growth in the coming quarter with an EBITDA margin in the range of 10 to 11%. We are vigilantly monitoring the evolving business landscape and proactively adapting to current and imminent expectations. We are committed to enhancing our product mix, built on optimizing processes, controlling expenses, and capturing growth opportunities to strengthen shareholder value. We anticipate your continued support as we navigate the road ahead together. With that, I would like to conclude my speech and would like to hand over the proceedings to our CFO, Mr. Khowala. Thank you.
Thank you, sir. And hello, everyone. And thank you for joining us for quarter 3 and 9 month FY24 earnings call. I will provide a brief overview of our financial performance for the quarter and 9 months FY24. Coming to the quarterly performance, Revenue from operations for Q3 FY24 is 319 crores, grew by 35% on year-on-year basis. The EBITDA for the quarter stood at 33 crores as compared to 14 crores same period last year, registering a growth of 131% year-on-year. EBITDA margin for the quarter stood at 10.3% for the quarter, up by 430 basis points year-on-year. The net profit for the quarter stood at 21 crores against 6 crores in Q3 FY23, which grew by 276% year-on-year. PAT margins for the quarter stood at 6.5%, up by 420 basis points year-on-year. Now coming to the 9 months financial, our revenue from operations for 9 months FY24 stood at 816 crores against 736 crores in 9 months FY23, up by 11% year-on-year. EBITDA stood at 77 crores, grew by 24% year-on-year, and EBITDA margins for 9 months FY24 stood at 9.4%, up by 100 basis points year-on-year. Profit after tax stood at 46 crores against 35 crores same period last year, registering a growth of 31% year-on-year. PAT margin stood at 5.6%, up by 90 basis points year-on-year. Cash generated from operations stand at 143 crores positive, which has been majorly utilized in reducing our net debt. Our net debt as on December 23 stands at 13 crores versus 134 crores in March 23. In addition, our diligent approach to the working capital management has led to decrease from 788 crores in March 23 to 736 crores in December 23, which indicate our commitment to efficient resource management. With this, I now conclude my speech and open the floor for question answer sessions. Thank you, everyone.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, wait for the moment while the question queue assembles. First question is from the line of Sonali Shah, an individual investor. Please go ahead.
Hello, sir. Good morning. Good afternoon. So our exports continue to remain muted this quarter as well. So when do we expect that to normalize?
We are hopeful from Q4 it should pick up, and in coming quarters it should start growing.
Okay, sir. And sir, what would be our branding and advertising cost for the rest of the year, and what do we expect our branding cost to be for FY25?
Like it's same like year-on-year we have been doing from years is around 7%.
Okay.
We continue to maintain that. 6.5 to 7%.
Okay, okay. That is from my side. Thank you so much, sir.
Thank you. The next question is from the line of Rahul Jain, an individual investor. Please go ahead.
Am I audible?
Yes.
Yeah. Can you throw some light on the performance of our subsidiaries, Rupa Bangladesh, Rupa Fashion, Euro Fashion, Oban this quarter?
We have 5 subsidiaries. Out of 5 subsidiaries, 3 subsidiaries, that is Euro Fashions, Oban Fashions and Emogi Fashions, they are both EBITDA and PAT positive. And in Rupa Fashions and Rupa Bangladesh, operations are not yet started, so they have negligible losses in terms of EBITDA and PAT.
Okay. My second question is, can you give us a contribution in terms of numbers or percentage for athleisure and thermal segment?
Athleisure contributes approximately 7.5% of the total revenue for 9 months, and thermal contributes approximately 8%.
Okay. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Varun Mishra from Big Four Investment. Please go ahead.
Hi, sir. Am I audible?
Yes, sir.
Yeah. Hi. Thank you for the opportunity, sir. Good set of numbers you've put. I had a couple of questions. One is like the revenue contribution. Could you please share in the segment on the basis of the products which you have, like in the economy segment, mid-premium and the premium segment? That would be great, sir, like in percentage terms.
Okay. For 9 months, the value growth in economy segment is around 20%, mid-premium segment is 22%, and premium segment is 40%. I am talking in terms of volume, but value, economy segment is 9%, mid-premium is 14%, and premium is 30%.
Oh, okay, sir. And so, like, could you give insight about the sales split between the rural and the urban areas? Like, how much comes from rural and urban?
Approximately 50-50%. We don't have exact data, but means it is approximately 50-50%.
Oh, okay. My next question is, like, what are the CapEx plans going forward? Like, what are the expansion plans for the EBO going forward, as we see?
CapEx is around 15 to 20 crores every year, like what we look as of now. And EBOs, we have around 29 EBOs so far, and around 4 to 5 further EBOs should be coming up in quarter 4.
In quarter 4, right, sir?
Yeah.
Okay. That's all. Thank you, sir.
A bit slow on the EBO part just because of the little market slowdown, but that's the basic plan.
Okay, sir. Thank you. My questions are answered. Thank you.
Thank you.
Thank you. The next question is from the line of Rehan from Equity. Please go ahead.
Hi, am I audible?
Yes, sir.
Hi, good afternoon. Thank you for taking my question. I had a question on the gross margin. Curious to know why the gross margins have come down on a quarter-on-quarter basis.
The main reason is basically a change in mix. The contribution from a higher margin business is lower than what it has been in the second quarter. And secondly, some extra scheme has been passed on the dealers to incentivize the same.
Okay. Second is that we've seen pricing to be under pressure for quite some time. Do we see any form of mean reversion to happen in the price, like the ASPs that we quote?
Didn't get you. Can you come again?
The ASPs have been under pressure for quite some time. So do you see any reversion of the same possible, any price hikes possible in the short to medium term?
Not in quarter 4 as of now, but all depends on the raw material prices. If raw material prices firms up further, we might. But as of now, probably nothing.
Okay. So not even in the medium term, right?
Not in the short term, I would say.
Okay. Lastly, could you help me understand that what would be the key growth drivers? I mean, we've seen from your PPT also that the X factors, modern trades, all are growing at 13, 3 and degrowth in exports. Curious to know what would be able to take our numbers back to, couple of years back where we saw stellar growth in 2021, 2022, like 17, 18% kind of EBITDA. So could you help us understand the same? What would be the next tailwind for your growth, or how would that growth trajectory go from here?
Like what is mentioned in our presentation, we are focusing on 6-7 different focus areas. But being the core line, which is the core of Rupa, definitely that would be the driver. We are focusing a lot into that, and that should drive the whole growth, the core range. And of course, we are focusing into export, we are focusing on modern trade, we are focusing on athleisure. So there are different focus areas, but the core segment should drive the growth.
Okay. And lastly, the share of from your higher margin business, which is the women's wear and the other stuff, has the percentage come down? Any reason why for the same?
In the women's wear?
Yeah. I mean, on a 9-monthly basis, it's, I think, 10% now versus 12 or 13% last financial year. So, any reason for the same?
Generally contributes approximately 10% of our total business. This time, thermals have not performed that much that we have expected, but things are online.
Okay. Thank you.
Thank you. A reminder to all participants, you may press star and one to ask question. The next question is from the line of Ronak from Robo Capital. Please go ahead.
Yeah, sure. Hello, am I audible?
Yes, sir.
So I just want to understand what is the current industry scenario and when can we get back to the previous margins level that we are having, kind of 20% kind of margins level.
20% kind of EBITDA margin you mean to say?
Yeah.
20% of EBITDA margin looks difficult. That was a very unique COVID year where demand was quite high and supply was a challenge. But yes, around anywhere between 13 to 15% is achievable, which we are quite hopeful in coming years we should come to those numbers.
Okay, got it. And what are, in the terms of demand scenario, how you are seeing the macros going on?
Sorry?
How do you see the demand scenario in the industry, like on the macro specific terms?
Like overall demand in last quarter was little sluggish, what we see pan India, especially into rural. But coming quarters, like as you know, yarn prices, raw material were falling in from last 1.5 years, which is little firm now and should pick up from these levels. And lot of destocking has been happened in terms of trade. So that demand should pick up. So that demand is there and consumer demand should also pick up as summers are heading. So we are quite hopeful in coming quarters things should normalize and should do well.
Okay, got it. Thanks. That's it from my side.
Thank you.
Thank you. A reminder to all participants, you may press star and one to ask question. The next question is from the line of Resham Mehta from Green Age Wealth. Please go ahead.
Yes, thank you for the opportunity. This is Resha. So the first one is, on the channel inventory. So how, is the channel inventory, with the retailers in the distribution chain, basically, if you can give some flavor on that?
Channel inventory, like usually previously dealers used to maintain at least a month's stock. While the prices are falling from last couple of quarters, that lot of destocking has happened because of instability of the prices. So once the prices are stable and are on the upward mode because of rising yarn material, raw material prices, it will push dealers to stock to their normal level again. It will give confidence to them. So that should happen.
So you said it used to be 30 days prior to, this price correction.
Yeah.
And currently, what would that be? The 30-day number would have reduced?
Probably half of it, or 10 to 15 days, we will say. But it's not to the normal level, for sure.
Right. And what has been the price correction that has happened in our portfolio or the realizations coming down in our portfolio in the last 9 months?
I won't say price correction, but because of the raw material prices, whatever prices has fallen, and that has been transferred to the market, the benefit of that. Because of tough competition, that has happened in the whole industry. So that benefit has been given to the market here.
Right. And as far as our working capital goes, what would be the inventory receivable days for the last 9 months?
Yeah, it has been come down from March. The current working capital days is 225 days against 272 days in March. The inventory days is around 160 days, debtor days is around 100 days, and creditor days is around 35 days.
Understood. And do we expect the inventory and the inventory levels to remain at around 160 days, or is there, room to kind of bring it down, or it could go up?
It will for sure go down in quarter 4. And it will further go down.
And
last year has been little unique in terms of demand and also the inventory level were high, but in coming quarters it should go down.
And in a steady demand environment, what should be that expectation on inventory days?
Roughly 125 days.
Understood. And we had a tie-up with Fruit of Loom. So does that still continue or?
No, we are not focusing much on that as of now. It's largely into our reviews and all, but not into general trade. And we are negotiating the agreement also. So agreement tenure is about to finish. So we are renegotiating the terms and conditions. Because we have to invest a lot and all. So there is some royalty fee and also we are negotiating into that. And if it comes to our terms, we'll continue. Otherwise, we might drop it.
Right, right. And lastly, I think a couple of quarters back, we were hunting for a CEO. So
Yeah.
Is that still on or what's the update on that?
We are still looking for a CEO, but from our last planning of 2 CEOs, we want somebody who can deliver results in long term, maintaining the hygiene and everything. So once we have a suitable CEO, the position is still open and mandate is with few agencies, but we are still due to find the appropriate ones.
So any timeline on, by when we plan to close this?
The timeline in terms of CEO, we are not focusing much, but in terms of building the team below CEO is what we felt is more important in terms of, like, say, IT head. So we got a very senior IT head. We are building up a very strong sales team, whether it is a modern trade head or a EBO head. So we are focusing more on that action team who can deliver results. And once we have that team, then we'll see it will be easy for a CEO also to come and perform better. And we'll think if CEO is actually required by that time or not. So we are building the second level team as of now. So focus is there more on that area now.
Right. So, the second level team that we are building, so IT head, etc., and, some positions that you spoke about. So were these positions not there pre-COVID or what is it? If you can just,
It was always there.
A bit more details.
Yeah, surely. Position was always there. And while the CEO was there, he also tried to fill in these positions and all. But we didn't get the right people. We had to replace few people and all. So ultimately, that second level team has to perform. So focus in that. So we are building the right team.
Okay,
so, and CEO or not. So even CEO is there, he needs to build up the team.
Right. And how was the winter gone by in terms of thermal sales?
Winter contributes thermal sales contributes almost 8% of the total sales. So means it's not that we have expected. We expect that the thermal sales will cross more than 100 crores, but currently it's around 68 crores.
Right. So the season has not been good, right?
Yeah, December was bad. Winter actually started from January, so that doesn't help. So we remember September, October was quite good, but it didn't continue. November and December, winter was flat. So didn't work the way we thought.
Right. And any guidance that you all are giving for the next financial year?
Next financial year, we are not very sure, but we won't be very aggressive on thermal. So, maybe 20-25% growth from these levels for sure, but not very aggressive.
No, I'm talking about the overall company revenue and margin.
Company revenue, of course, we are looking for a 15% growth with EBITDA margin of anywhere between 10 to 12%.
Understood. All right. Thank you. All the best.
Thank you.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Parikshit Kabra from PKD Advisors. Please go ahead.
Hi. Thank you for taking my question. My first question was about the growth. Congratulations on the great number that you have shown for this quarter. I was just wondering what you would attribute this quarter's growth to, because your competitors haven't grown as well. So you guys are you're an outlier here.
But largely, I think our growth was viewed from last few quarters and all. So it's in line, and we continue to deliver results in quarter four, hopefully, so we achieve our yearly targets and all. So quarter three was important, and that was due from long time.
Okay. No, the reason I ask is because, as I said, you're an outlier in this regard. But but there is no particular initiative or particular lever that has worked for you. It has been a general across the board, general operations and operation excellence that has brought this growth. Is that how?
Absolutely. Yeah.
Okay. Secondly, building on some of the questions that were previously asked, I'm just going to ask you openly, what is the path to a better ROE? Which lever are you expecting to improve your return on equity, and in what kind of time frame?
Like, what areas is like higher turnover, change in product mix, and return on equity is at least 20% is what we target.
But how do you plan to get there?
Sorry?
How do you plan to get to 20%? Like, what are you going to do to get there?
It's basically, if you have the right top line, you have the right inventory circle, cycle and everything, it will lead to that kind of return on equity.
Got it. And how do you plan to decrease your inventory?
By achieving the right top line.
Okay, so you're saying that by increasing top line, your inventory days will automatically go down?
Yeah, absolutely.
In terms of operational changes about how you manage your inventory or how you do your distribution, are you expecting any initiatives there to deliver any results in inventory days?
Yeah, we are doing a lot of retail tie-up nowadays. We have actually launched a program to do a retail tie-up where we have a more clarity of secondary what we are doing. So far we have a visibility of primary what we do. So as and when we have a better visibility of secondary, that should help us to maintain, to regularize our inventory and our dealer inventory as well. So that should help us to control overall inventory in the system.
That makes a lot of sense, sir. Can you elaborate on this retail tie-up? Are you doing this via your distributors, or is this a direct tie-up with the retailers?
Through distributors.
Through distributors.
They are launching programs in specific zones, in specific pockets to take it gradually.
And so how many of your overall retail coverage, what percentage of that has already moved to this new way of this new digital tie-up that you have?
Starting is quite small now, so in coming quarters we'll be able to share some better facts, better numbers.
Understood, sir. And so, can you give a number on what is the revenue contribution of your EBOs right now? Because you already have a reasonable number of stores, so just wondering how they are taking off.
It's quite negligible as of now. With 25 EBOs, nothing much.
Okay. But are we still planning on expanding our store footprint at that?
Yeah, absolutely, yes.
Okay. So you feel that the formula and the format has been cracked. It's just a matter of time?
Yes. It's a lot of learning, and that's why we have got a separate EBO head, because we thought like it's a time where we can invest further. And some formula we are able to crack, and if we expand, I think in coming quarters, coming years, we'll be able to do well in EBOs as well.
All right, sir. All right. Thank you for the.
Thank you.
Yeah.
Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Sonathilia from Beyond Capital. Please go ahead.
Hello, am I audible?
Yes, sir.
Yeah. Thank you for taking my question. So I have one question, in past few quarters, our margin declined a lot due to raw material concerns and demand concerns. Correct?
Yes.
So the raw material prices have already corrected. So what is your outlook on demand perspective right now?
Demand, as I said, should pick up from quarter four, because summer is also heading and export demand should also do well. So coming quarters, things should do well. And we have a lot of festive season also ahead. so demand should pick up from now. So March, April is the peak time, peak season for the hosiery. So demand is bound to pick up.
Okay.
Hello.
And sir, if demand is picking up from Q4 and raw material prices already like came down, then why we are not able to came back to margins of 16-18% from FY25 and we are focusing on FY26 for that?
Sorry, come again.
So if the demand is coming back in from FY25 and raw material prices are already stabilized, then can we do 16-18% margin again in FY25?
16-18% is not so easy. We would love to, but there is competition also. So that looks far-fetched as of now. But yeah, but we aspire to achieve around 14-15% in coming quarters and years.
Sure. Thank you. That's all for the next quarter.
Yeah.
Thank you. The next question is from the line of Raju from JB Maxi and Company. Please go ahead.
Am I audible?
Yes.
So my question is that regarding region-wise sales, you are primarily focused more on eastern markets and to some extent on north markets. Any plans of expanding in western and southern markets?
No, it's not like we are focused just in east. We started from east, so we are quite strong in east, but we are equally strong in north, west, and south as well. So in south also, Karnataka, we are one of the leading players, one of the leading market player in the south.
Because your presentation shows that the south is only 7% and west and central is 13%, whereas east is 47%. And now we are quite an old company. We have a good brand name also. So why don't you plan to expand it more on other regions and rather than focusing only on east?
So we are focusing in those areas also. But south, few states are difficult to crack, but we are working on that in those areas. Our team is working. So we are hopeful in coming years the percentage should further increase. In last 5-10 years, percentage has increased in favor of west and south. In coming year also, we ourselves also want to make west and south a little more stronger so that we can grow overall. But the focus is on pan area. Efforts are there everywhere.
Okay. And another question is that regarding gender-wise also, you have 85% of men wear, whereas women is only 10 and kids is 5%. So I think more value addition is there in women and kids.
To focus on those areas, and we are focusing on those areas. It takes little time to have right kind of volume in men's and women and kids. So it's a little tough segment, but we are working on that.
Okay. So because I think the company needs to re-gear itself to get the mojo back of the years of 19 and 20.
Yeah, we are working on that. Hopefully, a number should show in coming time.
Because, sir, year on year, when you say there is a growth seen, but if you consider quarter on quarter, there is no growth whatsoever.
Yeah, we agree to a great extent, but in terms of, if you see value in terms of volume, we have done a good job.
Sure, sir. So we are expecting the best from the company, and we expect that at least 14 to 15% EBITDA will be possible in coming quarters.
40 to 50% EBITDA. 14 to 15% EBITDA, like it's not impossible. Of course, we have all plans, but in coming quarter or in coming quarters, we will be unable to comment as of now. Of course, we are working in that direction only, so we can achieve those numbers. And it's not impossible.
Thank you, sir.
Thank you so much.
Thank you. The next question is from the line of Forum from Abasco. Please go ahead.
Yeah, hi, sir. So just 2 questions from my end. So currently, what would be our retail reach since, like as per PPT, we have remained constant since last 8 quarters, around 150,000 outlets.
I didn't get you, ma'am.
What would be our current retail outlet reach?
Current retail outlet yield is around 1.25 lakhs or 1.25 to 1.35 lakhs. We don't have a clear mapping, but we are putting up the SFA system and all the systems so we can map it better. So we are working in that regard, and we have a strong team to add on more and more retailers every day. So that work is happening in that direction. So we tend to add at least 5 to 10,000 retailers every year.
Okay. And our X factor areas have shown a growth of 29% year-on-year. So what is driving the growth here?
Yeah, we are seeing good traction in this area. So we have started making some big distributors in that area and also building our strong sales team there. So we expect a good result from that area.
Got it. And so have you gained any market share in Q3 since the performance has been much better compared to peers?
I didn't get you. Your voice is not audible.
Your voice is breaking a bit.
Am I audible now?
Yeah.
I'm just asking, have you gained any market share in Q3 since the performance has been very strong compared to our peers?
Yes, in terms of volume number shows that we have gained some market share compared to our peers, and we expect this to continue.
Got it, sir. And so what will be our gross debt as of December 2023?
Yeah, our gross debt for 9 months December 23 is 222 crores, and cash and cash equivalent is around 208 crores. So net debt is at 13 crores.
It's almost negligible.
Got it, sir. That's it from my side, sir. Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Sumit Khetan for closing comments.
Yeah. Thank you everyone for joining the call. I would also like to thank the management for spending the time and answering all the queries today. We are Orient Capital, Investor Relation Advisors to Rupa Company Limited. For any queries, please feel free to reach out to us. Thank you everyone and have a nice day.
Thank you so much.
Thank you. On behalf of Rupa Company Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.